folks, Dan Frio here on the Mortgage Update. It is October 7th, 2019. Let's get at it. So what happened today? Well, the market really didn't do that much. And this is an analyst that I follow and some sites that I follow. So let's go over. They're suggesting we lock right now. I'm not sure why, unless they know something I don't, internally. But I'm not locking my clients right now, and I'm going to go over a few reasons why. And why I think it could be a really volatile week, but why I'm really not locking. So if you're watching the channel, basically you come here to see what's going on with the mortgage-backed securities market, what's going on with interest rates, what my predictions are in the future, the short term, the long term, and things like that. And again, my name is Dan Frio, the Mortgage Update. You can hear me in Chicagoland area on WYLL radio as well as WIND radio. And if I could be of any help, please let me know. But don't forget to give me a thumbs up, and also go click that subscribe button down there, as well as the little bell. So every time I do post a video, you get an alert to check and see what's going on. So let's go with what happened today in the stock market. Let's just go over that. I'm not going to go into details. If you follow me, you usually see that I'll either go over what happened in the stock market, what tomorrow's going to bring. But I just want to let's start watching trends. Because on a daily basis, things are sporadic. And, so what are the things that are really affecting on what's going on? And the biggest thing that you're going to see right now is this, the U.S.-China trade deal. That is what is really playing havoc in the market. And nobody really knows what tomorrow's going to bring. So it could be, if we get good news in the morning, it's going to be an automatic effect because of social media, the web, the way information travels so fast anymore. As soon as we see if there's bad news or good news in the market, you're going to see an instantaneous change in everything, the stock market as well as the bond markets. So, what we see this week, I'm going to go over what the calendar looks like this week. The Dow dropped 95 points today, as we can see here. But in Tuesday and Wednesday and Thursday, these are going to be the big days that your mortgage advisor, and if you are a mortgage advisor, you need to stay close to your computer and have your finger set on the lock button in case some of these things play havoc in the market. So we're going to get the producer price index tomorrow, and we're going to have a speech by Mr. Powell. Chairman Powell, he is the head of the Federal Reserve. So he might say something that spooks the market or that the market likes. So these are events that can dramatically change the market. Producer price index and the consumer price index, we follow those very closely, and that monitors inflation. Inflation plays a havoc on the market as well. So Tuesday's big news is the producer price index. That usually comes out in the morning. And Powell will be speaking later in the day, so watch for that. Wednesday, again, mortgage applications, who cares about those, because we're looking at what this is doing for you, or if you're a home buyer or looking to refinance, or a realtor or a mortgage person, so you're not worried about this. How's this affecting you? So again, we're going to have another speech by Powell. He heads the Federal Reserve, so what he says has huge ripples through the markets, okay? And then we're going to get on Wednesday the Federal Reserve minutes from their last meeting. It's kind of they're telling us so we know what happened, but what we want to focus on is their wording on what they're looking for in the future, what their plans are. Do they think, as long as inflation comes in check and some of the manufacturing numbers and things like that come in maybe a little bit worse, are they looking to move? Are they cautiously watching this and saying, we if things slow down, we are going to move? And if they make words like that, we are cautious on the future. And if we see things not going so well, we're ready to make a move instantaneously. That's great news for the market. You might see rates come down. However, if they come in and say, we're pretty confident right now with what we did, that we're in a good position, that might not be very well for the markets. So we're going to watch that. You also hear me talk about the Fibonacci levels. And the technicals today, let's get back to the technicals. What happened today? We were down 8:30 seconds. So down is the price of the bonds. Remember, this is in relation to the price of bonds. As the price goes down, rates go up. Same way the other way. If this is green, which prices go up, rates go down. So we like seeing green here. However, here's the market. And like I always say, something that goes up will eventually come down. You never see this go up, up, up. You've never bought a stock and just watched it go up forever. It doesn't happen. So right now, the markets has moved very well. This again is the price of bonds. As this is moving up, rates are coming down. Great market run right now. But we hit this level. It's a Fibonacci level. This is a top. This is a bottom. We hit this. And now we're going to hit resistance. So unless something happens, especially from the Federal Reserve coming out or a lot of the inflation indexes, if nothing really comes out, we'll probably see things stagnate a little bit. But the world isn't that easy, isn't that safe to watch, or isn't that transparent. So again, a tweet, a hiccup somewhere can play havoc in the market. But if everything stays as it should, we had a great run here. I think that's the reason why a lot of people are saying lock, as you can see up in here. I'm still watching this, but again, I'm sitting at my computer 24 hours a day, basically, ready to say, okay, if I see a little hiccup down, I'm going to start locking on my people, because we hit this ceiling, and this ceiling has really played, other than this blip here, it's almost for the last 6 months. This has been a major ceiling for us to hit. So I don't really see a lot of rate reduction coming out going forward. That's why I think maybe a lot of people are locking. But I'm going to see, because you never know. You might get a little blip up here, and if I can find my customers, maybe a quarter lower in interest rates, hey, a 0.25% to your rate on a $250,000 loan might save you $50-$60 a month. $60 for 30 years is a lot of money. So I hope you like what you see. If I can be of any help, please reach out to me. You can call me at 844-775-LOAN, or shoot me an email at D for Dan, Frio, which is Frio, at parksidelending.com. Just Google search me. You can find all my podcasts, my radio shows, everything about me and what I do. And I hope you like what you see. So God bless, take care, and I will be back tomorrow.